you need to prepare for, I'm going to say a minimum 6 months time where you may not have water, you may not have electricity, you certainly aren't going to have food. I mean, this thing goes down. There's not little elves in the back of your grocery store that bake loaves of bread. Everything gets shipped in. Nothing, when credit breaks, nothing's going to move. Uh, to get out of the system with your wealth, there's only really one way to do that, and that would be to purchase physical gold, physical silver, hold it yourself, or have it vaulted in a non-bank private vault.
BillHolter, a well-known financial analyst and commentator, has long argued that we are entering the endgame of a broader financial upheaval. According to Holter, recent developments such as Russia's strategic purchases of silver signal more profound instability in global markets. He predicts that a failure to deliver in the silver market could trigger a systemic loss of confidence, sending gold and silver prices soaring. This view aligns with the forecasts of London Bullion Market Association delegates, who expect a potential 40% upside for silver shortly. Silver has already surged nearly 40% over the past year, leading some investors to hesitate to enter the market at record prices. However, the fear of missing out on further gains could drive more investors into the market. With silver expected to target $35 and gold aiming for $3,000 per ounce, price predictions are increasingly speculative, based on psychological thresholds and market momentum. Holter emphasizes the importance of owning physical gold and silver as protection against potential disruptions in the financial system. He advises investors to store their metals in private, non-bank vaults to avoid losing access to assets in the event of banking instability. His stance is echoed by Bank of America, which recently highlighted gold as the ultimate haven for U.S. investors amid growing concerns about national debt. According to the bank, the U.S. national debt is expected to hit unprecedented levels over the next 3 years, exacerbating the debt crisis risks. As a result, gold has become more attractive than U.S. Treasury bonds, especially in a low-interest rate environment. Bank of America predicts that gold's appeal will continue to grow, with prices potentially reaching $3,000. This shift underscores how economic pressures reshape gold's role as a critical asset in safeguarding wealth. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop.
Let me just kind of go back a bit. The gold rally started in October of last year, and that was when the U.S. basically weaponized the dollar, weaponized the SWIFT system, and said that they were going to basically commandeer 300 plus billion of Russian treasuries. And what that did was you had central banks all over the world, sovereign treasuries all over the world, looking at that and saying, well, wait, if they can do that to Russia, they can do it to us. What that's done is it kicked off huge buying worldwide from central banks trying to protect themselves, trying to fill their balance sheets up with something that will fill in the losses that are surely going to come from their dollar holdings. So just understand that's what's happened over the last, call it 1 year now. We're going to get we're in the end game, which is a process. And last Friday, Russia announced that they're going to be buying other strategic commodities, and top of that list was silver. And I've been on the record for over 10 years now that when this thing finally breaks, it would be a failure to deliver in the silver market. It would immediately bleed into the gold market, and you'd see prices go dramatically higher, and that's going to be your loss of confidence. That will be your signal, and investors, central banks, et cetera, worldwide, and that will literally destroy the ability of the treasury. The additional to prepare for that would be if you have debt and you can pay it off, pay your debt off. It's still not going to completely protect your house because you're going to have to pay taxes on an annual basis, and only Lord knows where and how high those taxes are going to go. Will you be able to afford it, or are you going to have to walk away from your house? We're already seeing that in like South Florida with the homeowners association fees. I mean, some of these people who bought condos 15, 20 years ago are getting bills in the mail of $250,000. And you're going to have people walking away, and those bills are only going to get bigger because your portion of what's left gets bigger. And as far as preparing, you need to prepare for, I'm going to say a minimum 6 months time where you may not have water, you may not have electricity, you certainly aren't going to have food. I mean, this thing goes down. There's not little elves in the back of your grocery store that bake loaves of bread. Everything gets shipped in. To get out of the system with your wealth, there's only really one way to do that, and that would be to purchase physical gold, physical silver, hold it yourself, or have it vaulted in a non-bank private vault. Do not put anything into a safe deposit box, because when your bank goes down, if you ever get to see that safe deposit box again, it'll be empty next time you see it.
Over the past 2 years, the BRICS bloc has been steadily working toward greater financial autonomy, specifically by promoting de-dollarization to reduce global reliance on Western currencies. As the group's annual summit approaches, BRICS has already made a significant move in that direction with the official unveiling of BRICS Pay. Participants were issued cards for the highly anticipated payment system at the BRICS Business Forum in Moscow, marking a significant milestone for the economic alliance. These demo cards, loaded with 500 rubles, were distributed to forum attendees and can be used at select locations within the World Trade Center throughout the Thursday and Friday events. The introduction of BRICS Pay is a landmark step toward creating a shared financial infrastructure that bypasses the US dollar, underscoring the bloc's commitment to reshaping the global economic system. Financial analyst BillHolter has weighed in on these developments, suggesting that the BRICS nations could be preparing to introduce a new currency, potentially backed by tangible assets like gold or other commodities. Such a currency would represent a significant shift away from fiat-based systems, and a formal announcement at the upcoming summit could clarify how this currency will be structured and backed. Let's get back to the interview.
BRICS basically has become an escape hatch for countries that are on the dollar system. So it's going to give them an alternative. And BRICS, I mean, in 2 words, it's growing. There's more and more countries that are becoming part of that, which means there's fewer and fewer countries aligned with the U.S. in the dollar-backed or the dollar settlement system. They're definitely going to come out with a communique. There's no doubt about that. My guess is they make an announcement that might further define how they're going to back the new currency and what they're going to back it with. You may even see percentages. I don't think they're going to go live with it. I mean, if they went live with it, you'd see the Western financial system in chaos, complete tatters, if it's even open by the time we have the election on November 5th. So I suspect they will make an announcement defining better what the unit is going to look like. And I would be surprised if they did come out and say this thing's going live. They've for years have complained about the U.S. dollar system. I mean, they're going to be a number 1, number 2 player in the BRICS, and obviously calling the shots. So I think that's going to be the role that they play. They do understand that they can't directly confront, and Russia understands this too, that they can't directly confront the U.S. From a financial standpoint, simply because those would be fighting words. And I don't think they want war. I think they just want free and fair trade settlement. They just want to do business. You have to understand the mindset of the Chinese, and I think Vladimir Putin has this same mindset, that they know mathematically the U.S. is going to collapse under its own weight. So they don't want to be seen publicly as the cause for the collapse. That's why they're slowly and methodically pushing the BRICS forward. Don't think they're going to push the U.S. over the edge. It's just going to happen on its own, simply because the math. I say math, I'm talking about, the simplest one is the amount of interest that's paid on the debt. But just look at the whole system. I mean, it's certainly over leveraged, and I do believe that we're if we're not at, we're extremely close to debt saturation. And if the credit card numbers that were released earlier this week or late last week, if those numbers are correct, it shows you the consumers tapped out. I mean, the whole system is one big debt bomb.
As global markets face increasing uncertainty, gold and silver are gaining attention as essential assets for safeguarding wealth. Many investors are turning to precious metals as a hedge with predictions of significant price increases and growing concerns over financial instability. As the BRICS nations continue their efforts toward de-dollarization, the economic landscape could undergo transformative shifts, further driving the demand for gold and silver. What impact do you think the de-dollarization efforts by BRICS will have on the global financial system? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.